Hello, everyone. This is Michael Feng, co-founder and CEO of Hummingbot, coming at you with the first edition of Hummingbot Live, our weekly radio show, live stream, where we answer questions from our community. Hello, everyone. Just one second. Co-founder and CEO. We answer questions from the community, run some trading bots, and talk about all things crypto. We're coming at you from our recording studio in Mountain View, California, where we're based. This also serves as our supply closet and our kitchen. So yeah, so that's our little room. And then this door that leads to the main office, where the rest of our team, who are primarily engineers, sit, and where we work away on Hummingbot. So that's kind of like a just brief introduction. So with that, I'm going to start answering some questions that we got from the audience. So I see, let's see. First question, what drives the logic of limit order price levels in the market making strategy? And how do you check that the market maker will make money even before you run it? That's a really good question. So I think there's two components to kind of setting up your strategy when you're a market maker. The first is selecting a market, and the second is what spreads and order amounts you should use for that particular market. So I would say the first part, market selection, is really important because you want markets that have a high amount of volume and a high amount of spread. Now, those two factors are inversely correlated. So typically markets with a lot of volume, like for instance, the Bitcoin Tether market on Binance, is going to have like really tight spreads, and markets that are with a very wide spread, like for instance a very illiquid decentralized exchange, doesn't have a lot of volume. So it's hard to find markets with both high spread and high volume, but you can absolutely do so. So for example, one tool I could use is CoinGecko. So let me show you how that works. So if you see, yep. So if you go to CoinGecko, and so let's say you have some Ethereum, and maybe you have some DAI as well. So you're looking to make a market on the WETH DAI pair. So you can look up DAI here. And then you can see, you can kind of go to all the exchanges, and I'm going to focus on the WETH pair here. So I'll filter on WETH. So you can see that CoinGecko tracks four different exchanges for WETH DAI. Hummingbot supports all of these, and right now the spread is very similar across all of them. And then Bamboo Relay has the most volume in this DAI WETH pair here. So all things being equal, I would look at the spread and the volume and try to find the markets with the highest spread and the highest volume in terms of which ones to market make for. Another variable, another column that CoinGecko has is this kind of depth between 2% and minus 2%. So this kind of shows you the spread is the distance between the best price and the worst price. And these two numbers tell you how much capital is sitting on the book within 2% of the current mid price. So here, this is kind of like an indication for how much competition you have against versus other market makers. So that might be helpful. And then once you actually kind of get into the market and you're actually looking at a market, so let's look at let's say one of these markets here. So maybe like the WETH DAI pair on Bamboo. And then after that point, in terms of setting the right spread, I typically start with something that's wider than the current market. Try to find a spread that's not the best, but maybe like a bit behind. And then I like to watch it trade for about half an hour or so, just to see how likely is it for my orders to get filled. And this is literally just watching the market, watching kind of like the exchange and maybe like an order chart, like the ones that like some other exchanges have. And then after that, I use kind of like and then I gradually experiment with different versions of either tightening the spread or widening the spread to see how it affects profitability. This is actually much easier in a more liquid market. In a DEX, you may have to wait for a few hours to really collect enough data to see how a certain spread level behaves. But I think there's also a little more because of lack of volume on decentralized exchanges. You can also kind of like you don't need to watch it as closely. You can kind of set a spread, come back in a day, and see how that spread behaves before adjusting it. So I hope that answered the question. And if you want to ask follow up, just put it in the chat. Let's see. Is there anything else? Let's see. 1 second. I'm trying to. Okay. So another question is in the cross exchange market making strategy, it looks like the number of trades done per day may be small. Do you have an estimate from your tests as to how frequently it is to trade? So yeah, the cross exchange strategy is really dependent on the differential between the two markets that you're trading on. So for example, if you're making on a market which is very illiquid, there's very little volume, even if you're the best orders on the book all day long, because you're dependent on other takers, you just may not get filled. Another possibility might be that the two markets aren't different enough. So, for instance, if you're doing cross exchange market making and you're going between two centralized exchanges, for instance, if the spread is very low and the bot doesn't make orders, that might be another possibility why the bot doesn't trade. So I think it's hard to give an estimate without really focusing on which two particular markets. Overall, I would say we found that if you want to like increase the amount of trading that happens, then it's better to run cross exchange market making on a single centralized exchange like Binance, and make on like a stablecoin pair, like one of the smaller stablecoin pairs, like TrueUSD or USDC, and take on the tethered pair on that exchange. So because of the higher volumes on the central exchanges right now, you should see more trading if you're doing cross exchange on a central exchange alone. However, I do think if you're focused on more like profitability per trade, it's easier to do it between a DEX and a central exchange, where you can really take advantage of the liquidity differential between those two venues right now. So another question is, does the strategy have any option to estimate optimal size for optimal sizes? So position size is right now it's an input. It's a parameter called order amount in our pre-market making strategy. We did introduce an inventory skew feature, which takes your order amounts and if you turn that skew feature on, it lowers and raises those order amounts to try to get you to a certain target inventory percentage. So for example, if you want to maintain like a 50% like Ether, 50% DAI portfolio, if you have the more Ether you have, the bot will try to buy more DAI and sell more Ether and sell less DAI to try to get you back to a certain percentage. So that's really the only parameter we've added so far to automatically adjust the sizes of your positions. However, I do think there are other ways that users could implement to change their positions. For instance, as the market volatility changes, or as a trend in the market goes in one way or the other. This is why we created this like plugin based architecture for the pure market making strategy. In the future, we'll probably add use that architecture for other strategies as well, because what it allows you to do is create a plugin that impacts how a strategy behaves. So you don't need to understand all the logic associated with the strategy. You just need to kind of create this like input, and the strategy can then consume that input and use that to change order sizes, spreads, and other factors which influence how the bot behaves. There are a few examples of this in the repo right now. Some other users have experimented with this as well. So hopefully we'll see more kind of examples from the community as to how to change a strategy using this plugin system. Will Hummingbot expand to reach Southeast Asia? Great question. So we're huge fans of Asia generally. For those who don't know, most of our team were born in Asia, and even though we now live in the U.S., so we still make it out there quite a lot. We do have a community repo in Chinese for Hummingbot. I would say one of our co-founders, Carlo, will be based in Kuala Lumpur for the next few months. So he'll have a chance to visit Singapore, and if there's interest in kind of setting up a meetup and really kind of doing a demo, I think I'm pretty sure he can do that while he's out there. So if there's interest, please reach out to us on Discord or email, and we'd love to get something done in Singapore or somewhere else in Southeast Asia. So a follow-up question. Does the market making strategy do any sort of inventory management? And is it conventional to hedge your inventory? So yes, absolutely. Inventory is a really big part of market making. So the way that professional market makers typically do it is they try to adhere to some type of set position. So for example, if imagine your portfolio is 50% Bitcoin and 50% US dollar. So one kind of like way you may want to do it is to always try to maintain that type of ratio in your portfolio. And so when you start off, you kind of quote exactly the same order size on both sides of the book, but as your inventory changes, I think you can do one of two things. The first thing you can do is either adjust your order amounts so that you're buying more of something and less of something else to try to get you back to that kind of like that inventory position. The other way you can do it is to adjust your spreads. So if you're let's say you started with 50% Bitcoin, 50% US dollar, and now take this off since you're just only. And now you're basically in a position where maybe you have like very little Bitcoin and a lot of US dollar. And so the inventory skew feature that we just recently added would, in that case, be more aggressive in buying Bitcoin and less aggressive in buying US dollar. So you can either adjust the position size or the prices that you set for your orders. So right now, our inventory skew feature only adjusts the position size. We found it's easier for users to understand how it behaves. And in the future, we may add other filters that change the price given inventory as well. But we wanted to start simple. Let's see. Another question, will Hummingbot consider offering grants or bounties for individuals who successfully help grow and organize the Hummingbot user community by educational sessions and networking? Absolutely. So we don't have anything formal set up right now, but we are starting to kind of start to grow the developer community organically, and to kind of really to grow the community in general. So a few initiatives we're doing. The first is obviously things like this to really educate the community. The second is we just launched a developer forum. So if you go to our website right now, I think there's a link at the footer for the forum. I'll post it on the chat here as well. It's something we're going to announce tonight at a meetup we're doing with 0x. Basically, the forum will be a place where developers and traders can go and talk about how to customize strategies, how to build connectors, and really just provide a forum for long form content about Hummingbot to be searchable and to be put online. And the third thing we're doing is Gitcoin bounties. So we've realized that building these exchange connectors is something that from our standpoint, it's hard to really do that all of them ourselves, given how many exchanges there are out there. We've done about 6 so far, 3 centralized and 3 decentralized, and we've had Bamboo Relay build their own connector, and Loopring/Dolomite working on another one right now. So what we're going to do is we create these bounties where anyone in the community can build a connector for a particular exchange or exchange protocol. And I think as we kind of do more, we'll also kind of do more kind of ambassador programs or community outreach programs where users can really organize their own events and teach people how to use Hummingbot. Nothing formal right now, but if anyone is interested, reach out to us in Discord. We're happy to kind of do a few one-offs to see if it really works. And if it really works, we can really scale these community outreach programs. Let's see. Is there any advantage to having the algo run on Go and TypeScript to try to get more fills? I would say no. So right now, what we're doing is the code is in Python, but we compile to Python before the code actually runs, which means that basically the execution code is already in low-level C. So, but more broadly, I think that right now the constraint is more on the networking side. So, for example, most of the exchanges are on cloud computers, like AWS or Google Cloud, and so there's always like this kind of like a bit of a delay if you're basically interacting with some type of cloud API. So we use WebSockets to try to make that as fast as possible, but typically you always have that like networking delay for cloud. There are some exchanges starting to do like co-location, physical data centers. I believe blockchain.com just announced something like that. But we feel like given the wide swath of exchanges out there, especially on the decentralized side, currently speed is not, I guess, the edge. It doesn't give you like as much of an edge as it would in fiat markets, where it's very mature, everything's in physical data centers, and you have to build like fiber optic cables in order to even have a shot at competing with the big boys. What is our most commonly used trading strategy and pair of all time? It's a great question. So we actually just started collecting data about a couple months ago. Before we just had an open source project and had people use it, and we've heard, we thought that people were using it quite a lot, but we weren't really sure until we created the Harmony liquidity bounty and gave users an incentive and a reason to actually send us their orders and trades. And the reason we do that is to verify that all these trades are real before having Harmony pay bounties based on that volume. So I would say, like based on that, obviously we're seeing a lot of users, trade on the Harmony token pairs. Most common strategies are always typically pre-market making. I would say outside of that one particular token pair, we also see a lot of users trading the WETH DAI pairs on different decentralized exchanges, as well as other tokens like Link. And there's really a long tail of other tokens we see people trading. And my thesis is that it's because when you have tokens sitting around in your inventory, you want to make more productive use of them. And so some tokens you can lend out, others you can stake, but for the vast majority of tokens, there's not much you can do with it. And so running some type of like algo bot or market making bot is better than just simply holding them in your wallet. So let's see. I think that's the end of our questions. I'm really glad that everyone had a chance to really kind of ask questions, and if there's more, please put them on the live chat. I'm going to do one very quick demo today of running a bot, and the reason I want to run this bot is because I want to showcase how Bamboo Relay works, because they just added a connector into Hummingbot. So with that, I'm going to switch over to a screen and run a bot for you guys. So let's start from the very beginning. where we configure a strategy for Bamboo Relay. So I'll start. So, I did see a few more questions. So, one is, in what major ways are decentralized exchanges different from non-decentralized exchanges for the purposes of market making, arbitrage, and cross exchange? That's a great question. So, our goal as Hummingbot long term is to create a single set of infrastructure that people can use to run trading bots across any exchange, whether it's centralized, whether it's decentralized, or even if it's on a different blockchain entirely. So there are some significant differences, and part of the I think our value is to try to abstract those differences away from a person who's creating trading bots, because you don't want to have to worry about all that stuff. It's a lot of work. It's a lot of low-level stuff. So some of the major differences are between various exchanges are obviously whether they're centralized or decentralized, which affects how fast a trade is confirmed or how fast an order is filled. The on the DEX side, it's non-custodial, so you don't have to worry about the exchange potentially being hacked and running off with your money. However, the user experience in setting up an account and getting a wallet and being able to trade on that exchange is typically a lot more work versus a centralized exchange where you really just deposit your assets and start trading. I think that some other differences between exchanges come in terms of how their exchange microstructure works. So there's I think most of the exchanges we're familiar with are the central limit order book exchanges, but there's actually there's a few other models out there. There's something called request for quote, and there's also automatic market makers like Bancor and Uniswap. So in our view, these are all just opportunities for users to make money. So the more markets there are, the more fragmentation and dislocation may happen between them. And so our belief is that the more exchanges, and in particular the more different type of exchanges we can add into Hummingbot, the more ways there are for users to make money. And in that way, that's how we avoid saturation, which is, obviously, if we only had a few exchanges and we increase our user base to like 1 million people, then there may be less opportunities for everyone. But if we keep on adding exchanges, then hopefully there'll be many opportunities for people to make money even as our user base grows. And finally, how much of Hummingbot development do you expect to come from, I guess, us versus the community? So I would say in the very beginning, obviously, we did all the development because we had to show that it works. I think right now, obviously, we'll still be developing, but I think we'll be developing differently. So we're focused right now on creating like a really well-documented, composable foundation for both strategies and for exchange connectors. And that'll help us, build these faster. But I think it also help our users build both strategies and exchange connectors. So we'll still be doing a lot of work, a lot of coding, but in order to kind of like really leverage our resources the most and to try to scale this as fast as possible, I think our time is better spent focused on documentation, tooling, code, like the base layer code, kind of like stuff. This is kind of like a protocol. It's actually very protocol-like. And also creating templates that show users how to customize their own strategies and how to add new exchange connectors. And so, and finally, also creating kind of like bounties and incentives for people to actually do this. So I would say like we kind of view ourselves as more the enabling mechanism, and the users are the ones who have the power to really do whatever they want with our code base. Great. So with that, let me just run one bot. I think we're actually we wanted to be only half an hour, so I didn't want to take up too much of everyone's time, but let me run a bot for Bamboo Relay and we can see how this works. So I'll pick the pure market making strategy, create, and let's see, Bamboo. And so let's take a look at the 0x pair on Bamboo before we do anything else. So the 0x pair here, this is there isn't a lot of activity here, but as you can see, the order book is pretty wide. So right now the spread, it looks like, is about let's see, a little over 2% right now is the average spread. So that's a very healthy spread. So let's create a trading bot here and see how that works. So let's see. So Bamboo, I'll pick the 0x WETH pair. I typically like to use multiple order mode because it's kind of like if I use multiple and I set, like, let's say 2 levels of orders, what allows me to do is be more aggressive with the first level and be more more aggressive in terms of spread and less aggressive in terms of size on that first order. And then for the second order, I can be more aggressive in terms of size and less aggressive in terms of spread. So the reason that the intuition behind that is that you want to catch, like, the small movements in markets because that's how market makers make money. But if there's a really big dislocation, then that's a sign that you want to buy more or sell more because as the market reverts back, then you can make more per trade. So with multiple, that's why, like, there's kind of this staggered level kind of concept that a lot of market makers you may see. So for instance, let's say if I set the first bid and ask order is 1% wide from the mid, so that's a 2% total spread, then I'll set the second level like 4%. And so you'll see how that works. So right now I'll just use default 60 seconds. I'll place let's see, 2 orders per side. So the first order, I'll be, maybe a bit conservative, actually maybe like 10 0x, which is actually maybe a bit more, maybe like 50, which is I think about $2 right now, or $10. And then I'll increase it to 50 again for the second one. So the second order is about twice as large as the first order. And then I'll make that kind of 1% as well. And then I won't turn on the inventory skew feature for now to make it clear what's actually going on. So basically what this does is this will set basically a total of 4 orders on the order book, 2 on the buy side and 2 on the sell side. The first level, which is the first buy order and the second buy order, will each be 50 0x in size. And those 2 orders will be 2%, have a spread of 2% total. The second set of orders will be 100 on each side, and will have a spread of 4%. And so that's how you kind of like create. You can kind of use multiple orders to create like a staggered set of orders that kind of give you a more fine-grained control as a market maker. So right now it's starting, and it's going to start running. One question. I see one question about our business model. So our business model, this is a question we always get, given the fact that we're an open source project. Actually, before I go on, let me just show you. So this is it's right now, it's created orders for Bamboo Relay, this pair, and so you can see here the orders. There's 2 at 50, this buy and sell, which are kind of like the first orders on the book, and then there's a second set, which are down here. So these are the second 2 set at 100 each. And so every 60 seconds, the bot will cancel this set of orders and place a new set to try to maintain the same type of spread around the price. And so you can change how frequently the bot resets the prices and so forth as well. So to answer the business model question, basically we partner with exchanges and projects for on crowdsourced liquidity solutions. Right now, most projects and exchanges, in order to get liquidity, they have to they have to they have to hire all these market makers and to pay these hedge funds a lot of money. And we want to try to create a crowdsourced alternative to that. So the first kind of experiment we ran was what we called a liquidity bounty for Harmony Protocol. And that's been operating for about a month. And that's where users can earn rewards for market making for Harmony. And we get a cut of the rewards from Harmony in return for kind of setting up the program and to like tracking everything and for them. And so we're starting to see, we're starting to do these partnerships with other exchanges and other token issuers. And so you guys should see kind of like more of these bounties being rolled out in the next few months. So I'm going to stop there. I realized actually there's actually a bug on our Bamboo Relay connector right now. I actually saw this when I was rehearsing for this early this morning. But right now it seems like there's an issue with kind of like order cancellations. I noticed that right now Hummingbot thinks that those orders were canceled, but instead they were being kind of added to the book, and the old orders were not being canceled. So this bug is in 0.13.0, and we'll work with Bamboo to get that fixed pretty shortly. This is probably a pretty simple bug to fix. But the one thing that I think this highlights is Hummingbot is very much a beta product. What we're doing, I think, is pretty hard. Trying to make high frequency trading available to everyone. And so, please use it. Anytime we see a bug, we try to work with our partners and ourselves to fix it ASAP. But this might take a few days to really get rolled out. So in the meantime, please use caution with Hummingbot. And if you see any kind of like weird issues or bugs, please let us know, as we are still improving the product. So I hope that was helpful. I think that was that wraps up our first live stream, and we hope to do this every week. Maybe answer questions, run bots, and talk about really anything that's going on today in crypto. So signing off, and have a great rest of the day.